So what is going on with interest rates? Here in 2023, we have seen ups and downs and all over the place for rates. And it's been a huge topic of conversation because of course we want to see these come back down and try to, here over at our team, watch to try to get the lowest interest rate and the most savings for our clients. So again, Stephanie Johnston here at the Johnston team, and wanted to talk to you guys a little bit today on what's going on with rates today and what we've seen over the last couple of weeks for perspective of possibly what we could see rates do here in the future. So today's national average rate is 6.9%. Do like to quote what the national average rate of lock loans is on a given day through all lenders for primary residences. That way it gives a great gauge of ups and downs with the overall market. Each client's rate's a little bit different. If you'd like a rate quote, please reach out to us directly. We have people higher, lower, all over the place in terms of the specifics. But again, the overall trends, that 6.9 rate today. So what we've had go over in the last couple of weeks, July 7th, we saw that the national 30-year interest rate went up to 7.22. That is a 2023 high. We saw one other time back in March that we peaked up there and kind of dropped back down. Then we've got to go back to actually October and November of 2022. Each time we kind of peaked up to like that 7.25 range, we did spike up and drop, which is great. Really, this last time we were kind of concerned that wasn't going to happen and we were going to keep going up. Luckily, we saw that again, kind of a peak up and drop. So now, why did that happen? So leading up to that height, we did see lots of good economic news. So one would think, that's great. Why would I want bad news for the US economy? Well, the overall reason that the Fed is raising interest rates are actually because inflation is high. Inflation by definition is too few goods for too much demand. So if there are good economic indicators in the market, that means people are going to keep spending money. If people keep spending money, we can't get inflation under control, or there's the thought process. So we saw great unemployment numbers, GDP, all these things that kept coming out over and over again that said the US economy is booming. And the Fed thinks, okay, well, how can we drop rates and how can we stop raising rates if we're not getting where we need to be? So rising interest rates makes it more affordable or more expensive to stop having people spend. So kind of crazy concept there. But then last week we did see the actual inflation number come down. It was better than expected. And that was what we gauged. The CPI, or Consumer Price Index, is what we use to monitor inflation. And that came out better. Immediately markets turned. Great news, inflation's better. So actually on inflation, two things, CPI, and then the other thing is the average over the last 12 months. So the average inflation on a 12-month rolling average is down from 8.5 to 2.97. That's great. So again, the Fed wants us to be at 2%. So a couple of weeks ago, back up again to when we saw rates increase, we had the Fed come out and said that they do expect 2 increases to federal funds rate because inflation was not there, was expected to continue to rise. And again, they don't want that. So we are expected to have a rate increase to federal funds rate in July and possibly one later this year. So as we continue, we saw rates go up because we think the Fed will raise rates. So if rates come out later this month and increase, we probably won't see a mortgage rate increase, because it is already factored in. We are more paying attention to what the Fed says. Are we gonna have future increases or we're not? And anytime those predictions change, we're gonna see big spikes up or down accordingly based on what's about to happen to the federal funds rate, again, for mortgage rates. So big picture, the good news is lately that, again, if we can continue to see the CPI come down, that is the hands down the best thing that we can do, continue to see that drop, hopefully we can stop rate increases from the Fed and eventually pause and eventually retreat. And that's when we've been telling everybody that rates should drop. They will drop, in my opinion, mortgage rates. It's a matter of when, not if, because again, we should not live in inflation forever. So will it be later this year? Will it be next year? Regardless, hopefully, fingers crossed, we continue to see good inflationary figures. We continue to have, that drop so that the Fed can A, stop raising rates, B, pause, and then C, start decreasing rates so we can stop dropping down rates. Last thing I'm going to leave you with real quick. When people say, well, rates are going to decrease, why would I buy a home today? You should. So we actually here, especially in Dallas, Fort Worth, one of the biggest markets I play in, I do a lot of other stuff in other areas, and this goes true for a lot of the major areas. And on a national average, we actually have too few homes for the demand. So there's a lot of buyers that are sitting on the sidelines that might not be able to buy or thinking rates are going to drop. And if rates drop, my opinion, we're going to see all those people come out. Prices are going to go up. So you're actually better off on purchasing a home today. And we have what's called a rate protection program, where we actually have some tools where we can drop your interest rate later, where we cover a lot of the cost associated with doing so. Super inexpensive to get knocked out and drop the rate. Then you've locked in the sales price of the home, get the lower rate, right? Because rates again will drop at that point. So kind of the best of both worlds. So happy to go through that with any homeowners that would like to kind of discuss pros and cons of purchasing now or later, run simulations and see if it is the right time for you and your family to purchase a home. So thank you guys for tuning in. It is a little longer of a video, lots to talk about in terms of mortgage rates. But again, thank you for listening. It is Stephanie Johnston over here at the Johnston team with Service First Mortgage, and here to help out with any mortgage needs, questions, just general, anything we could help out with, property questions and information. We're here to help. Hope you guys have a great day. Thanks.